Hi, welcome to Galvanize. Man, we've got a show today. I got Don Aquilano, Dustin in the house. Don has been in venture capital now, what, a decade?
Almost two.
2 decades?
Right,
wow.
yeah.
Third fund or second fund?
So third fund in Allos Ventures, a couple funds prior to that.
Wow.
Sort of related.
So, and then you were a founder a couple times over,
Yep.
right?
Yep.
And what kind of companies?
Two were software companies. So one worked, one didn't. Mm-hmm. So I've seen both sides of that story.
Right. So Dustin and I are real passionate about Indiana and what this market is doing. Dustin on the real estate side, me on the tech side. We see these things affecting each other a lot. Would you agree?
Yeah, absolutely.
And so this is a growth market. I always like to start the show by telling everybody one of the things that, one of the reasons we want to start this show is about 15 years ago, I was on the phone with Allos Ventures, and there was some 20-something MBA that said, what the hell talent do you guys have in Indiana? You guys can't even get your time right, right? Right?
Yeah.
And I just had this chip on my shoulder ever since. I mean, we are getting better and better at venture, but we're behind, right? I think we're 32nd in the market. We're the 16th or 17th largest economy. What is the gap, and what are people like you doing to close that gap? Kind of take that away from us.
Yeah. We're, obviously we're part of the solution, not part of the problem.
Mm-hmm.
But if I compare it to when I first got here in 2000, it is night and day difference,
Mm-hmm.
right? But sometimes the progress, you don't see it for a while.
Yeah.
It happens, and then at some point you realize it, but it was going on for a while. And that's what's kind of going on now. You have a lot of the success stories, which helps drive venture.
Yeah.
You can go back to the software artistries, but then Primos and Exact Targets, right? And that sort of is
even Max IT. I mean, that was
Max IT.
That was a big one that a lot of people don't know about, right?
Yep, exact. I mean, so there's a whole list of them, right? And there's going to be a number in the next couple years that will be very, very impressive as well. But it'll be like an overnight success. The VC is actually improving. We're still far behind where we need to be, but there's a number of things that are going on that are really interesting. Most of the larger investments that we have in the state have 1, 2, or in some cases 4 or 5 other venture capital firms regionally and from the coast that are
really
syndicating,
right? Syndicated. Put hair on that. What does that mean?
Yeah. So whenever we do an investment, we like to do it with another venture capital firm, another wallet, another brain, another set of networks.
Reduces
right?
risk.
It reduces risks. It helps improve
the
process.
value of their network and being able to connect to more potential customers, more potential partners.
Absolutely right. Absolutely right. And that only happens if they like what they see, what's going on in Indiana, right? And so that is happening more and more, and it stems from the success that they had, and it stems from the ecosystem that they're seeing.
Now, Dustin, you're seeing more and more outside money come into this town on the real estate side. You guys think these things are related at all? Do you think there's a connection here on what's going on as Indianapolis as an economic engine and what it's doing as a real estate market?
Yeah. I mean, it's all growth.
Yeah.
Population growth.
Okay.
What type of population? Millennial growth. People coming in or people leaving. And so that's obviously helped our real estate market tremendously. What happened in 2008, 2009 has turned our entire economy into a renter society.
Right.
And so as you see, if you drive downtown, you see cranes everywhere.
Yeah.
So you see a lot of multifamily going up. But then also on the flip side, you have families that don't want to live in multifamily, so now they're going to the residential side.
Well, I'm glad you said that because if you go to Fountain Square, you go on Mass Ave, you see these beautiful apartment buildings being built. You see these houses being regentrified. And every person I see has a Salesforce shirt on, right? Or they're wearing one of the technology startups that are going on downtown. There's got to be a relationship there. That low cost factor from a labor side, the quality of life that we have in this city. I mean, are other markets seeing this as a discounted value in order to get an opportunity to do a headquarters here and to find the talent they need in order to run an organization?
So I think absolutely.
Okay.
One of the things we talk about when we raise our fund, but also when we're backing companies and looking to syndicate with these other investors, is the cost of actually growing a business here in Indiana is about half of the West Coast, right? And that is across housing. That's across the engineering, hiring, and the administrative trade it. And so that is a big factor.
Sure.
Much more capital efficient, which matters. It matters significantly for investors. It matters for the companies. The dollar goes further, and they have much more sort of degrees of freedom to succeed.
100% agree, because if you're doing a startup between Santa Monica and San Diego, you can't get it off the ground without $5 to $8 million, right?
Right.
But you could get 3 startups off the ground for $8 to $9 million in this town. I mean, if they're focused, if they're really at least first initial angel round, would you agree?
Yeah, absolutely.
And so when you're looking at diversifying, I'm getting hired outside of market to find startups to invest in. Like the people are reaching out from the coast to find that. You're doing that from the investment on the real estate side. There's got to be a correlation here. There's too many arrows pointing in the same direction. And when we think about that, how long is the gap? Whether it's on the discount side for the VC to recognize that on Indianapolis or the real estate, how long do you see this gap? How long is there hay to be made here?
I mean, if you look since 1992, our market from a population standpoint has grown 20%.
Oh.
So it's like and I don't know the exact figures from a population standpoint, but I think if you look at the graph, I think from 92 to 2010, it was like a 20% population growth. And so, those are key indicators. Our median income has gone up. So our median house price has drastically gone up.
Yep.
So, and then because of the regentrifying areas downtown, there's big investments being made down there. So, future, I don't see any reason for it to slow down. I just don't see it.
You see the same thing?
Absolutely. We're not seeing it. And when we can put a few $1 million as opposed to $10 million to work and buy that same runway, it really helps. And the folks that you see wearing the tech shirts downtown, I mean, just if I think of 3 companies, Amplify, Scale Computing, Lessonly. When we invested, they had tens of employees.
Octave,
hundreds of employees now, right? High-paying jobs, living in great places, right? And so that's the virtuous cycle.
And isn't there some other things about the Indianapolis market that make us different? When you look at the other growth cities in the Rust Belt, you look at a Columbus, you look a Nashville. Nashville is just killing it right now. They're not landlocked. They're not. There's no coastal problems with running out of real estate. I mean, I was talking to a friend of mine the other day. He's one of my golfing buddies. He said he can remember when Broad Ripple was the outside of the city.
That's fine.
Right, 62nd Street was the outside of the city. We're looking at 165th right now, 166. I mean, that's becoming the outside of the city, right? Yeah. I mean, I was reading an article how Pendleton is going to be a burg of Indianapolis, and Anderson's going to be enveloped. That I think that's actually, we'll see that in our lifetime. I think that will actually happen because we can just keep crawling out. The fringes of that real estate can be more and more cost effective. So you can see growth there. Is that what you guys see too?
Yeah, I mean, it all comes back to affordability. I think you see with the downtown area too. It all depends on too, like where are you at in your lifestyle and within your life. Are you just single? Are you recently married? Are you having kids? I mean, it all depends on where you're moving. And so, with the tech side, mostly young workforce, they have no reason to live up in the burbs. They want to live downtown where everything's happening.
Yep.
And so I think that's where you see a lot of revitalization going on. But then you look at Anderson, to your point, then you start moving outside of downtown and you start having families, then it starts looking at affordability. And Fishers, Carmel, Westfield, all those, I mean, it's getting expensive.
Yeah.
So when you talk about Anderson being 25 minutes from Fishers, and you can buy a 4-bedroom, 2.5-bath house, all brick home in Anderson for $150,000. You're going to see a lot. You're going to see a lot of growth happen.
That 15 years ago, by the way, we raised to $2.2 million for a company in Anderson, right? A precursor to what was come. There's one last thing I want to talk about for this episode, guys, and this is the other thing that the Garage Ventures guys kind of smacked us in the face with. Can we get the talent to this city that it takes in order to build another breakthrough company? Is it plausible?
So I'm going to say yes, right? And it's not without its challenges. But by the way, you ask any VC on the West Coast, they're saying the same thing. I'm having a hard time hiring the right engineers and so on. So this is not, when you hear it here, it's not like we're the only place, right? So without a doubt, everything's about people, right? It is getting better and better. It's not exactly where we need. We graduate a number of great engineers and computer science folks and business folks in the state. And with these companies that have been growing and exited, and a number that are still growing, that are sort of under the radar, there's a lot of experience that's actually happening, right? And so these folks generally stick around and pour it back into the ecosystem, and that's what we're seeing. So plausible, absolutely yes. Without challenge, no.
Yeah. Would you also say? Do you also see this that we get a lot more base hits in percentages in this market than you would maybe on the West Coast, where the VC are truly trying to find that 1 in 1,000 kind of Uber type play where they're swinging for the bats, like they're forced to have to do that. Where we can get a B2B turn off the ground where something's a $20 or $30 million business within 3 to 4 years or 5 years, because we're a little bit more frugal with the way we make decisions, and we're a little bit more conservative. And is that part of what we have going on in this city?
So absolutely, and it's both good and bad, right?
Okay.
So without a doubt, very capital efficient about growing businesses, very frugal about the balance between growth and spend. So yes, we do get a lot of doubles and triples, right? We're on the West Coast. There's a bunch of folks swinging for the fences, if you will. So part of what we do is we try to help our companies think a little bit bigger, which is, listen, there's no reason we can't hit another home run here, because we know we sort of got the doubles and triples covered.
Yeah. I think it goes. I think you look at from just the way you think.
Yeah.
And the Midwest, the way we think is always fairly small, conservative. It's just how we've been brought up, and so when you look at that, and I always bring it back to real estate because I think it all goes hand in hand. Is real estate investors here in our market swing for singles and doubles. You know, and it's just because, you know, our average price point here is very low. And so you're going to have to hit a lot of singles and doubles to make it make a living out of it.
Right. Yeah.
And so, but you look at the West Coast, you're hitting home run. You know, you're shooting for the home run because you may only do 1 or 2 deals a year. And, you know, because it's just that much more competitive.
Yeah,
so,
I think the talent's here. I think we're playing with different math and variables, but we don't need the math and variables because the cost of living is consistent to have. I mean, you know, to make $400,000 or $500,000 here is a great living in this city. Right. I mean, it's a millionaire on either coast. Right. And I think that's part of what people are starting to realize in general. Right. It's like that. Like, I mean, you know, the 15 years ago there was nothing to do downtown Indianapolis. Now we have a vibrant city. It is safe. It is growing. There's a great food scene, which, man, I'm telling you, being a foodie, when I got here, this town sucked, right? And now we're there, and it's really holding its own in its own punching weight for a city this size.